Hello, everybody. Hope we're all having a great day wherever you are, whatever you may be doing. No trade calls, no recommendations, or responsible known stuff. We're here for educational purpose only. Here for another one of these Substack videos. So, had a couple of questions on recent videos I posted here on the Substack. So I thought I'd do a quick one just to go through the three latest ones we did, and then we'll probably start to focus on something else. So basically, I'll start with USD, which is the most interesting one, and I think the most important. Our base case here is that, well, I'm not going to go through the whole discussion about market being max long, stocks max short dollar, but here our base case was that we were basing and we're going to try and come back into the 100 mark, and there was a potential for a move back into the 103. Now that started to look much better once we got the kind of BS framework announced with Europe on Sunday. So I think that's just accelerated it, the move. And base case is also that there's a possibility that, that with Powell, with, whatever we get data rest of the week, we could be trying to put in some short-term top on stocks, but that's a different discussion. So here, what's happening? So we had this dollar right at that 98 mark, and this was acting kind of like one of those ball underwater levels, right, where the market kept the pressure on, low, new low. But then once we couldn't hold that and we started to pop back above, we started making that low higher low, right? And what we discussed was that this was a very interesting location, not only because of how the market was positioned, but also the technicals. We're looking for this to pop right back into that bigger level, which was that big multi-year range, kind of like 109 into the 100, and we're right back at that level. So I think here what you have to keep in mind is that nothing goes, well, normally stuff doesn't go from A to B in a straight line. So here, even if we get a little bit of a retracement, keep in mind that as long as we don't break back down below that 98 mark, this could easily come all the way back into there and still try and get this breakout. But here, base case assumption is still that this is going to try and break over, stabilize back above 100, and we'll see at the very least a move back to the 103, and then it gets a little bit more interesting. We'll have to discuss. But also, seasonals here are fairly interesting going into August, because they tend to be bullish, DXY. So that's still in play, right? This is firmly in play, trying to get traction. No real change. TLT. Here again, we're seeing a little bit of a press higher. Seasonal is very bullish for bonds in August, so also this is looking good. And here also we're seeing a very, of course linked, but we're seeing a very, very similar pattern, right? And what you want to watch is how we behave around this yearly open, this 88 mark, because here, where you can be looking at all kinds of patterns, but it really looks like it's trying to press back above or back into that 2025, and if everything goes in line, these moves get traction, and you see, these seasonal patterns coming in, let alone other developments in the market, above this 2025 mark, you should be looking for this to come all the way back into the 90s. Really, this was the big pivotal level, and we talked about on this breakdown that we had a magnet zone, and essentially that magnet got hit, right? And right now, again, this is probably one of the hardest trades, one of the hardest charts, but it's extremely messy. It's not clean at all. But what is clear is that the market is really unable to attract new sellers below that 85 mark. So the risk is that it keeps on pressing higher, weakening the upside resistances until it can force a little bit of a rip. Now, does that change the bigger picture, make this structurally bullish? Absolutely not, because, even in bigger picture, even if we come back into that 2025 open, this could still be holding some broad channel to break back down. But at least here, technically and seasonally, what it looks like is that it's trying to press into that 2025 open, and if it can get traction above there, then 90, 180, 92 is the level. So this is the pivotal level to focus on. Doesn't really get interesting here for me unless we get day closes below the 85 or day closes above this 9180. Above there, then, it gets much more interesting to the upside, or below that lower level gets much more interesting to the downside. But right here, this is a very, very choppy zone, right? Very, very choppy zone. So we'll have to see what gives, but that's what we're looking at. Also, again, that bullish push helped by the seasonals. And last but not least, what we were looking at was that RSP, right? And what we discussed was the importance of understanding asymmetry, and how, regardless bull bear, how this is going to break, when it's trading at this level, is very interesting, because either on a break or a failure, it gives you very interesting asymmetry to play, either for a breakup or a breakdown. So here we didn't really get pure triggers, but what you see is, we came back into that high, and then you got this negative close. So even if you're being aggressive, and again, it's not a really pure trigger, but if you shorted that negative close, again, asymmetry, very tight stop back above those highs, a little bit of a miracle hold, but that's held, and now we're coming back down, right? And the potential here, especially if you look at the way this is trading, this kind of action, break below here, monthly close below, this really opens up that move back into the 2025 open. And then this is very classical dynamic across a number of charts here, potential snapbacks into the 2025 open. Clearly, you can see the risk reward is very, very interesting. So also here, nothing much has changed right now. Here, if we see today, more of a panic flight to safety into Microsoft, Facebook, Apple, Amazon, whatever, this is likely going to suffer. So this trade is looking better, but nothing much has changed, right? It's still a trade where you want to look for tight shorts here for a move back into the 2025. And if the broad market starts to join up, you want to buy a break and hold above with a tight stop for a continued grind higher, as ES goes back into those higher targets, into that 6,800, 7,000, ideally with the broad market joining in. But, again, everything, is playing out fairly interesting, and, let's see what gives. So that's the way I'm looking at these charts here. Quick video, but a couple of people emailed me asking me for a little bit of an update. So here it is. Wishing everybody an awesome one. All the best. Talk to you guys soon. Take care. Bye-bye.